Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to unpack your stock-related questions tonight are Jean Pierre Verster from Protea Capital Management and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. I noticed that the S&P 500 and the Dow reached new highs yesterday, and you would naturally think that that would kind of spill over to our own market. But it didn't look like it did really. I mean, the JSE was only up about almost 1/3%. And I'm wondering actually why that optimism didn't really filter through to the JSE today, JP.
Zinati, it's a simple answer comprising two letters, A and I.
Okay.
And that's because we don't have any lovely AI stocks like NVIDIA or even some of the other big stocks in our market. That has been driving the US market higher so far this year, while we're stuck with a bunch of commodity companies and a few other Rand hedges, while the Rand has strengthened in the last at least 2 weeks or so. So that's why if we had some semiconductor stocks and some AI stocks, then we would probably also be at an all-time high.
All right. Well, actually, just talking about AI, and there was actually a question on Friday about, the viewer was asking with AI beliefs and tech futures. Where do you actually invest in AI? Are there, counters that you should be going into right now and maybe getting out of the ones that take profits from the ones that have run quite hard and maybe put that money into others that maybe have more value and more opportunity, Rowan?
Yeah, so that, is an important question. I think it depends what your view on the potential is. I think some people feel that more than the full potential is in share prices of some of these stocks. We're going to see Microsoft and Alphabet, I think, report at the end of the close. So we'll get a better sense of whether they're translating all the hype into actual revenue and profitability. I was on a call earlier today and investors talking actually about Asia tech, because there's never been a wider gap between the valuations of says US global tech and those counters in Asia. And, one of them is Tencent on our local market. So that's quite interesting. And people do see potential value. There is a lot of AI in the likes of Tencent, Alibaba, JD. Some of them on very low single-digit PE. So it would be quite a big move. But you probably see more value in China. It is a bit unclear, but I think that's also what's been a drag on the JSE has been our exposure to China and lack of exposure, as JP said, to the hot AI stocks.
Yeah, all right. Well, quite an interesting question here on Mondi. Can the panel care to explain what Mondi are attempting to achieve with the 10-for-11 split? I think it's some sort of share consolidation that took effect yesterday, where you get 10 shares for 11 existing shares, if I'm correct. JP, just walk us through the technicalities of that.
Sure. So firstly, Mondi paid a special dividend. They sold the operations in Russia and they paid a special dividend, and that dividend was roughly equal to an 11th of the share price at the time. And Mondi is dual listed. It's listed in the UK, in London, and it's listed here in Johannesburg as well. And typically what happens in the UK, it's a UK thing, but that's why they did it, is when you have a big special dividend, UK companies tend to do a consolidation, so the share price doesn't drop too much. So if it wasn't for the consolidation, Mondi's share price would have dropped by an 11th on the day that it traded X the special dividend. And what they decided to do is at the same time, and this is where the tricky thing comes in, because there was effectively a slight delay or effectively a different timing on the SA register versus the London register of when will the special dividend be paid and when will you get your 10 shares, new Mondi shares, for the 11 you give up. So that's probably what people are seeing. They're seeing a mismatch in the timing between the money that comes in, the cash for the special dividend, and the adjustment of the number of Mondi shares that they used to own. But the bottom line is you end up with exactly what you had previously. It's just you have now a portion of your value of the investment in cash, the special dividend, and the rest still in Mondi shares.
All right. Well, I mean, let's talk about, because I mean, now it's been done. They've sold the Russia business. They've declared a special dividend. After this, Rowan, would you say that Mondi is on a more solid footing and maybe having a better prospects in terms of their operations and what they do with capital from here on out?
Yeah, so they certainly were initially penalized significantly for having those operations. And I think what the market didn't realize at the time when the sort of Russia-Ukraine war broke out, how profitable those Russian operations were, I guess, now that they've been sold. But yes, that's in history. So they are a sort of pan-European business more and focused. So the sort of demand for their products has been fairly soft, paper and kraftliner containerboard, and pricing has been a little bit soft, but it does look like the cycle is turning. So very much depends on sort of the price they can achieve and input prices. So it does look like there's a bit of a respite there. So I think the operating environment is improving for them. I don't think demand is particularly strong, but input costs are going to come down, and it does look like it's positive. So it is a very well run company, good capital allocators, and it is looking at a reasonable around these levels.
All right. Well, let's talk about one of the trends, the interesting trends that we saw today, and that was the falling of the telcos, MTN, Telkom, Vodacom. There's a question here. I do not buy falling knives, but surely this dreadful drop is overdone. JP, let's actually start off with that. Would you say that it is overdone? And also maybe what was the reason for the fall today?
So Zanati, if you want to see a dreadful drop, look at a Naira graph, the Naira against the Rand or the dollar. And the Egyptian pound doesn't look too much better. So a few years ago, you could say MTN has got exposure to countries across Africa with very vulnerable currencies, but at least Vodacom was a South African focused business. Well, that's not the case anymore. They went into East Asia with the Safaricom acquisition, and then the big Vodafone Egypt acquisition. So now Vodacom has the same or very similar risk profile to MTN. And when you have, like we had today, a sharp devaluation in the Naira and the Egyptian pound, then companies with operations in Egypt and in Nigeria are going to feel the heat. And to a large extent, that's what you saw today. So yes, I agree. I wouldn't catch these two falling knives quite yet. Keep your eye on those two currencies, and only once they stabilize, you would consider potentially looking at MTN or Vodacom.
Well, there's the second part of that question on the drop. Of course, I hear your reasoning, but just maybe looking at competition, the viewer is asking, could the potential threat from Starlink taking over the cell market in the future be one of the reasons? I'm not sure. Rowan?
Yeah, so I mean, I think that's one of the more minor reasons. I mean, there's sort of increase in competition and alternative technologies, but that's sort of also always been on the horizon. So that's not specific. I think JP really covered the key issues. I think more broadly, we are seeing a slowdown in demand and saturation, and also quite a lot of pricing pressure. So those, particularly in South Africa, I'd say MTN, Vodacom are ex-growth. And they're struggling to find new growth vectors in the form of, say, fintech, which has sort of had a lot of hype, but it's not really being realized, I guess, in terms of profitability. So all those things being said, I think the sort of markets, just repricing them, sort of revaluing them. I did see, like, for example, a broker report come out on MTN target price of 85 Rand. So that's way below the current spot. So I think a fair segment of the market is fairly bleak on the sort of medium-term prospects for the telcos.
I mean, a low tide sinks all boats, and we saw Telkom also being dragged today. Even though, I mean, you talk about JP, MTN and Vodacom kind of having almost similar profiles, but not Telkom. And I'm wondering what you're thinking of Telkom at the moment. And also if maybe markets, investors wouldn't go to Telkom because of its own risks.
Yes, so Telkom is a bit different. I think everyone there is waiting to see, can they really sell SwiftNet and how much will they get for it? And is there value in Gyro, the properties and the towers? How much can they get for that? So apparently they're getting closer to a transaction. I wouldn't hold my breath. I think at most times these things are more complicated than what it seems like in a spreadsheet. So it is different with its own set of risks, but I'm also not too excited about Telkom either. So the whole telecommunications sector, not just in South Africa, you can look internationally. I've looked at a few telecom companies. At some point when they reach that saturation point, when everyone has a phone in their pocket and a second SIM somewhere in another device, the revenue stagnates, but the costs keep on increasing. So when they reach stagnation, they're not great businesses. They look optically cheap, but they seem to stay cheap.
Well, I mean, Telkom is big on, fiber infrastructure, and they've said that they're trying to position the business as an infrastructure business. Rowan, and I mean, obviously there's this, big optimism around fiber. Would that not maybe give Telkom a one-up or not at this point?
Yeah, no, I think, look, you obviously selling fiber sort of if you're the infra company backhaul, but it's still into a low growth sector, the telecommunications sector. So it doesn't really drive the needle. And the fiber to the home is very capital intensive. We're probably going to see prices come down there as well. So there's going to be top line pressure, sticky costs. And so, yeah, it's not an exciting sector, unfortunately. And I think Telkom is a sort of some of the parts breakup kind of investment case. But as JP pointed out, it's just taking much longer than has been anticipated. And then the operating environment continues to be challenging.
Okay, just before we go to the break, as we're still on telcos, the question is buy, hold, or sell. They are looking quite cheap. Rowan was talking about a target price of 85 for MTN. What do you do? If you're not in the stock, do you buy or do you just stay away? And if you are in the stock, JP, do you hold or sell?
I would look for opportunities elsewhere. I think your capital can find a better return, better growth in another stock. So I'm not excited about the telco sector, neither of the three.
A quick one, Rowan, on your side?
I concur. Yeah.
Okay.
Stay away for now.
All right. So off air, JP actually reminded me that a SENS announcement came out at 5:30 after the markets close from Transaction Capital, where cautionary announcement saying that the board has decided to pursue the possibility of the unbundling of We Buy Cars. JP, just talk to us about that announcement and your thoughts on it.
Sure. So Transaction Capital had alluded to this before, that they might look to unbundle their 75% stake in We Buy Cars. And it seems like they are actively pursuing it. So to remind you, Transaction Capital has got effectively three businesses. SA Taxi, which is in big trouble. Newton, which is a decent business, makes almost 500 million rand a year. And then We Buy Cars, which last year made 650 million rand. And the coming year might make, call it 750 million rand. And at the holding company, they have the issue of a put option obligation of the other 25 stake of We Buy Cars and a 280 million rand guarantee for Santaco to buy into SA Taxi. So what this unbundling of We Buy Cars might lead to is that if you're a Transaction Capital shareholder, you might get We Buy Cars shares, and those shares might be worth the same or even slightly more than the current market cap of Transaction Capital. And then what's left in Transaction Capital is SA Taxi, which will then be even more ring-fenced with its debt problems, and Newton, which itself could be worth 5 billion rand. So they are unlocking the value that currently is, that a lot of people don't see, by showing that one of their three legs, they can actually unbundle and they can deliver that value and return it to shareholders. So I think it's a very positive announcement. And I wouldn't be surprised if Transaction Capital shares rise quite sharply. The big question is, if it does happen, what valuation will the market put on We Buy Cars? Will it be 7.6 billion, which is called a 10 PE, and is equivalent to the price of the put option, or could it be more than 8 billion? So that's an open question that I think the management will still create a narrative, tell a story to have a bigger and better valuation for We Buy Cars if this does happen.
Unlocking value for the shareholders, but what about the value of the rest of the business? So there's obviously now, if the deal goes through, there's We Buy Cars separately, and then there's transaction capital, which is left with Newton and Gomo. And I'm wondering, what about the value of the actual transaction capital business without We Buy Cars, Rowan?
Yeah, so I think that, I guess what they're doing is to some extent sort of freeing We Buy Cars to find its own market value, because I obviously feel that it is getting penalized by being part of the transaction capital structure. But as you say, the sort of rump that's left behind with, I guess, all the potential sort of problems, although they will be resolving some of those, and maybe an expensive head office, it will probably, the market would see that as sort of quite unattractive. And that may sort of be impacted. So I think they're going to have to address those concerns and possibly, have a small team that's managing out the SA taxi business and ring fencing it, and then really let Newton run on its own, because there's no real need for a holding company and a group and all the overheads that go with that. It's way too small. And if they do that delicately enough and carefully enough, I think that would, significantly sort of alter the narrative. Otherwise, I think people will be very uninterested in sort of the rump of transaction capital.
Yeah, it's going to be quite interesting to see how the market reacts to that tomorrow. But let's go into more questions. This one says, why should we leave platinum and palladium alone? JP, should we?
Sure. Well, I hear the Russians are going to leave them alone, or at least produce a little bit less. Norilsk announced that they have some issues, so that could support the palladium price and platinum. Look, you can make an argument for this either way, Zanati. You can say, oh my goodness, there's palladium and platinum used in jewelry and used in catalytic converters, which is the internal combustion engine, and that's going out because of EVs, and you can make a whole case to be very bearish. Or you can say, this is a very scarce metal. You get it in the southern part of Africa, in South Africa and Zimbabwe, and you get it in Russia and almost nowhere else. So these are very special metals, and who knows what we'll figure out to do with these metals going forward in all kinds of other industries. So they've got a lot of value. So you can almost take your pick. I'm going to sound like an economist when I say that on the one hand, there's a bullish argument, but on the other hand, there's a bearish argument. And between the two, I would be more bearish. I just by nature don't like commodity companies. And you never know if the Russians actually have the type of shortages they tell you. They're a bit sneaky sometimes. Sometimes they tell you they don't have a commodity, and then they have a lot of it, and the price doesn't rise. So I would still be cautious about the platinum and palladium market.
If I remember correctly, Coronation decided to be bearish on PGMs, and they disinvested from their PGM investments. And I mean, surely that should move the needle some way in the market when a big asset manager like that decides to make that decision. Rowan, where are you on that? Would you say that also you can kind of see both arguments, or are you leaning more to one argument?
Yeah, so generally I also feel that, the commodity cycle, it's very hard to predict, and sort of supply and demand and where it exactly sits. So it's a bit of a guessing game, and you're probably better off looking for sort of less forecast risk. Having said that, the narrative has changed somewhat. We're seeing sort of a slight swing away from battery electric vehicles to hybrids and still internal combustion engines. It looks like quite a few major economies are moving out the sort of phasing out target deadlines for internal combustion engines. So net, that is somewhat positive for catalytic converter demand. So you are seeing sort of price stabilization here. I think you have to be very picky about which company you choose to invest in if you do. For example, Impala spent a lot of money on RB Platts at the peak of the cycle, so they look like they sort of overspent. Sibanye-Stillwater, they raised a massive convertible, but that will be quite dilutive. So you have to be quite cautious. And maybe inside a diversified miner, you can pick up some of that exposure if you're feeling a little bit more bullish at these levels.
There's a viewer that asks us every second day about investing in the Satrix and NASDAQ 100 ETF. And I think the viewer's trying to see what all of you guys say so that they can kind of weigh the options. JP, on your side, Satrix NASDAQ 100 ETF for accumulation.
So, I mean, the NASDAQ in dollar terms has been going up in a straight line for, call it a year after a difficult 2022. But if you look over the last 10 years, also almost in a straight line except for COVID. Then you add Rand weakness on top of that, and you are getting, you have gotten, and this is important, past tense, a very good return from the Satrix NASDAQ ETF. The question is, just because something has really worked for the last 10 years, will it necessarily work as well for the next 10 years? And we spoke earlier in the show about NVIDIA. There's the Magnificent Seven, the 7 biggest stocks on the NASDAQ, which have done exceedingly well over the last 12 months and longer term, admittedly. And I would say that I think it's a well-constructed index. I do think it's a bit frothy at the moment. But for most investors whose day job it isn't to analyze companies and decide which stocks to pick, buying a well-diversified index is not a bad idea. I would not necessarily just put all my money in right now because of the high valuation.
On your side, yeah, you talk about the high valuation. Rowan, do you think that it's still a good idea to, if you're in the stock, in the ETF, maybe accumulate more, or do you think that at this point it should just be stock picking?
Yeah, I mean, I would, if I were in the index, maybe rebalance a bit. I think what you're seeing is a very high point in the hype cycle. I think AI will have significant impact, but it's going to take longer than anticipated. So I think what you could see is as that filters through and the hype dies down, maybe valuations will tap off from these very frothy levels. And so you're better off probably diversifying elsewhere. Actually, the JSE just at current levels is looking quite attractive. There is mention that emerging markets more generally are looking quite good value, and as the US cuts rates, so that'll be emerging market positive. So places like Indonesia, India might be interesting. So that's quite a diversifier away from, say, US tech. And I think you'll probably be well served to look elsewhere.
All right. Well, James, let's get to the last part of the show, and that is your stock picks. JP, what will it be?
I'm going to pick an offshore stock again, Zenati, one that's listed in Sweden. It's called Evolution Gaming, and it's effectively a company that provides content to gambling sites. What they do is they've got casino studios. So there's live games, whether it's blackjack or roulette or spinning a wheel or doing something like that with live people, a live dealer. And they give that feed, the video feed of that, plus all the infrastructure and the software that's needed to gambling sites that operate around the world, and they license their live casinos. And it's a very, very profitable business. So this company has got great returns on capital. They've shown great growth, and it sounds like the growth going forward will also be above average. People around the world have got a tendency to gamble. So irrespective of maybe your own moral qualms about it, you can make money not from gambling itself, but investing in a company that supports casinos with live streaming of casino games. So Evolution Gaming is my stock pick tonight.
Rowan, what are you gambling on tonight?
Yeah, sometimes it feels like that, but we're going with Anglo-American. So a bit of a contrarian play here. It has come under a lot of pressure. They rebased their production targets, but I think they're really being realistic about what the output is and what demand will be for the next few years. There is still the decarbonization of the global economy, and they're very well placed from that. And as I mentioned, commodity levels and prices are much more reasonable. I think we're going to see moderate growth, not a collapse of global demand. There is a potential for some stimulus in China. And so below £20, which it's come down quite significantly, it looks like a good entry point here. So that's also part of the attraction just at this point in the cycle.
All right. Well, thanks so much for your time and analysis today, gents. Much appreciated. That's all for tonight's Stock Watch. Thanks to our guests, Jean Pierre Verster from Protea Capital Management and Rowan Williams from Nitrogen Fund Managers. Up next, The Close. Stay watching.